Live from Bloomberg's world headquarters in New York, I'm Sonali Basak.
And I'm Tim Stanivek. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
Bitcoin just surging since Election Day with the buy everything rally. It's now sitting at nearly $87,000, but prospects of a pro-crypto DC is fueling a high level of optimism.
Crypto companies spent millions this election cycle in an effort to build that pro-crypto perspective, and it appears to have worked. Nearly every single candidate backed by the crypto industry have been declared winners.
And we're going to talk to a Coinbase executive about the spending and the future of U.S. policy. Plus, you're going to hear from the CEO of Mara, Fred Thiel.
All that ahead over the next half hour on Bloomberg Crypto. First, though, let's check out just how Bitcoin has been performing against the overall stock market. Look at this, Bitcoin versus the MSCI World Index. There's pretty much no comparison. You can see the massive outperformance of Bitcoin so far this year, up more than 100%. It's more than doubled so far this year versus the MSCI World Index, which is up close to about 20%. Look at this performance, though, over the last 7 days. This is since Donald Trump won the election last Tuesday. Last Wednesday, he was declared the winner. Look at the rise that we've seen in Bitcoin in just that amount of time. It's about 30% higher in the last 7 days. Not just crypto, though, and not just Bitcoin that's ripping higher. We actually see some altcoins surging over the last week as well. Dogecoin may have started as a joke, but look at this rally over the last week, close to 120% higher. Solana also 27% higher over the last week. And then you got XRP up more than 30% over the last week. This surge in crypto all tied to optimism over how a second Trump administration will deal with crypto, say friendlier regulations maybe, and even perhaps a strategic Bitcoin reserve. Sonali, it's not just crypto, though, that's been on the move.
Yeah, we're going to turn to the equity gains here that are tied to the crypto industry. They're significant. You think that Coinbase alone up more than 60% over a 1 week period. You were talking about that potential change in regulation. The Coinbase firm, of course, is fighting the SEC on some matters. And with the change in administration, you have to wonder what a change at the top of the SEC might look like and whether life might get a lot easier for Coinbase, plus more assets potentially being listed over time, what that could mean for Coinbase's fees. Also taking a look at MicroStrategy, up more than 50%. We know that MicroStrategy's Michael Saylor himself owns a lot of Bitcoin, and you should take a look at those levered ETFs as well, up even more than that. Mara, up almost 50%. We're going to be talking to its CEO, Tim, in just a moment.
All right, we're going to look forward to that. Meantime, Anthony Scaramucci joined Bloomberg this week. Check out what he had to say about crypto's role in this election cycle.
When they're doing the autopsy on the side of the Democrats, it's really Elizabeth Warren and Gary Gensler that weightily contributed to them losing the House and Senate because, the crypto people got involved. They were looking for fair regulation. No one's looking for laissez-faire regulation. They're just looking for rules-based guidance, not regulation by enforcement.
Skybridge's Anthony Scaramucci earlier this week. Well, the crypto industry spent around $135 million in the election cycle to back dozens of candidates in the Senate and the House. Nearly all of the candidates, 49 of them in total, that were backed by crypto's biggest political action committees were declared winners. We got Bloomberg's Fola Kinabe. He's been tracking closely crypto's political spending. He joins us now here at headquarters in New York. No question, Fola, that Fair Shake was just incredibly successful in this election cycle. What happens now, though? What do they get for spending this tens of millions of dollars?
Well, Fairshake and the crypto industry's affiliated PACs, Defend American Jobs and Protect Progress, which spent over or around 135 million on this cycle. What the campaign spending gets you is meetings with legislators, and it seems like the industry is also trying to ramp up its lobbying efforts in Washington as well. So it looks like they'll be around, and they're also going to be spending in 2026 as well.
What'd you see out of the races? Because really there are only two, and there are races that are still being counted, but only two that were lost that they had really given to. One that struck me, for example, was Sherrod Brown losing his Senate seat in Ohio to Bernie Moreno. Sherrod Brown was a critical part of financial regulation. And so do you see now the tide significantly turning in these down ballot races in particular?
Well, the Ohio race was the hotly contested race, and the industry is perhaps biggest bet in this cycle, and they spent $40 million to support Bernie Moreno, and he's the winning candidate, and he sunk Sherrod Brown. Now, whether or not that's going to turn into favorable regulation is not clear. We'll have to see, but it's definitely their biggest bet, and it's definitely sunk someone who they felt like was an adversary to the industry.
One of the PACs called Defend American Jobs, and it doesn't have anything to do with crypto, at least in the title. The messaging of the ads also not focusing on crypto at all, talking about illegal immigration, border issues, inflation. What does that say about crypto actually being an issue for voters versus how they thought they could defeat these anti-crypto politicians?
Well, that was one of the most interesting aspects of the industry's strategy. Perhaps sensing that the crypto is not a kitchen table issue for most American voters, right? The industry in its ads, in this $135 million worth of spending, really didn't mention crypto or crypto regulation at all, right? Like they're mentioning, like you said, immigration, inflation, and other kitchen table issues. And so it's looking like a different approach to campaign spending from corporations and from these huge super PACs, and we'll see if other industries catch on and decide to take that path as well.
Fola, thank you so much for joining us and for all of your reporting. That is Bloomberg's Fola Kennedy. And Coinbase, of course, is one of the leaders of all the crypto cash tied to the election, pouring more than $75 million into pro-crypto candidates. We're joined now by the company's chief policy officer, Faryar Shirzad. You know, you think about what has been won here for the crypto community, and I think the immediate question does become what changes? What do you see in the immediate aftermath?
Well, our big objective in this entire process has been to take the hyper-politicization of the crypto issue and the demagoguery out of the equation. And so about a year ago, we decided to build a very large political operation to do just that. And I think if you had to boil it down, that's the thing that we've been able to achieve, which is we've been able to get policymakers to think about crypto on the merits, to look around the world and see that virtually every other G20 country is providing regulatory clarity in the space. And now we hope the U.S. will do the same. All we're looking for is clear rules, certainty, predictability, and an ability to build in the United States, and I think we're going to be able to get that.
So on that, what's the specific action that you want to see that will indicate to you on day one that this administration gets it when it comes to crypto? What is it?
Well, there's two things. One is which is what President Trump has already done, which is to set the tone from the top. He's been very clear that he wants crypto to grow and build in the United States. He wants the U.S. to be a leader, and that matters a lot because it sends messages to regulators and officials all throughout the federal and state level of government, which I think is important. The other is we want clear rules, and that means what's known as a market structure bill, which means legislation that will give the CFTC the authority to regulate crypto commodity spot markets and direct the SEC to create opening for the tokenized markets of securities to be able to trade there. And then we want rules around the issuance of stablecoins. U.S. dollar-backed stablecoins make up about 98% of the stablecoin market. They should be issued out of the United States, and legislation will allow for that to happen.
What comes first? Those are absolutely tangible measures. They're making its way through Congress. But at the end of the day, it will matter to investors what they see in what timeline.
Well, I think the rally that you've seen both in underlying crypto token markets and in the equity markets for companies like ours tells you how severe the headwinds have been that we've been facing as a result of the political chaos that the Biden regulators have unleashed on the industry, as well as some members of Congress, including Sherrod Brown and others. So I think once you sort of take this kind of ahistorical period that we've lived in, where you've got politicians and regulators trying to gang up on American industry and take that away and put us in the same footing as any other industry, you see what the opportunity is. And investors are responding both in terms of the token markets as well as the equity markets. And for companies like us, we're going to take that opening and build here. We're going to build the next generation of the payments infrastructure and help build the next generation of the financial architecture, which is really, really exciting. The U.S. needs to be a leader in that space, and we're eager to do our part to make that happen.
Now that you see the U.S. being more of a leader than it has been over the last 4 years in this space, I'm wondering how that changes your outlook about crypto around the world. For example, does this make investment in Europe more or less desirable? Does it make investment in China and other parts of Asia more or less desirable?
Well, China's a different story. They have a completely different regime, so I would set that one aside. But for most of the rest of the world, they've been courting companies like us extraordinarily aggressively. They've taken a look at the U.S. They've seen how much pressure we've been under as a result of this political sort of kind of targeting that we've been under. And they've been trying to draw us into the UK, to the EU, Singapore, the UAE, Australia, Brazil, you name it. Major markets around the world have wanted the industry to leave the US and come there to get the political certainty and the regulatory certainty that we need. And now there's going to be an opportunity to build here. And I don't think it's an either or thing. We're going to continue to, as a company, Coinbase, invest in the European Union, which is our second largest market, invest in the UK, which is our largest single national market, and then throughout Asia and Latin America. And we're really, really excited about that. And we're excited to build in the US as well. I think it's going to be an extraordinary period for the development of a tokenized financial architecture. And Coinbase is going to be in the front of that, and that's super exciting.
The scale of what you have done was large. It was so large that it was the largest single issue super PAC in history. The campaign dwarfed what you saw from, say, Koch Industries or Chevron, and it was really second only to what you saw in the fossil fuel industry. You guys won most of the races out there, only lost 2 so far. Is there something more permanent here that has been done to U.S. politics, in your view, with a recognition from politicians across the country now that they can't ignore crypto?
I hope so, but I don't think it's just a lesson for crypto. It just tells you what happens when you've got a handful of demagoguing politicians who pick on a group of Americans who are trying to build an industry here and try to use unlawful means to do so. And one way to deal with that has been to go to court like we have and a bunch of others have. That'll take years to resolve. We all have very high conviction that we're going to win, but it's going to take years until some of these cases work their way to the Supreme Court. In the short term, we've gone through the political route. And when members of Congress, candidates, others say to us, okay, tell us exactly what you have in mind, we say to them, we want clear federal rules, we want legal certainty, and we want an end of the demonization. And it's hard for Democrats or Republicans not to find that resonant with them. I think progressives like crypto because it's democratizing and it's inclusive. Republicans like crypto because it builds financial strength and it's also empowering of kind of the grassroots. And so we're very much kind of one of the few bipartisan issues left in town. Our political spending has allowed us to clear the air and have a dialogue with policymakers, including both presidential candidates. And I think other industries who are facing this sort of politicization should think about that as well for themselves.
All right, that's Coinbase's Chief Policy Officer, Faryar Shirzad, joining us from Washington, D.C. Coming up next on Bloomberg Crypto, Mara CEO Fred Thiel on post-election moves for Bitcoin miners.
Then Dogecoin outperforming Bitcoin on Trump's win. We're going to dig deeper into the surge in altcoins.
And remember, to access all of the latest data and news on crypto, just check out CRYP Go on the terminal. This is Bloomberg.
Bitcoin miners are soaring as well. Ever since the election, Mara is up nearly 50% over the past week. We are joined now by Mara CEO Fred Thiel. His Bitcoin mining business has more than 18,000 Bitcoin on its balance sheet. And it's not just about the Bitcoin you hold. It's also about the idea that more mining could be moved to the United States now that we know the outcome of the U.S. presidential election. But mining is a business where there is a very large moat. It's not easy just to pick things up and move them and start over. How quickly can this be done?
So it's very difficult to move a mining operation. For the first thing, you have to have access to power. You have to have power substations. In our case, our mining infrastructure is designed around modular containers. So for example, it takes us 1 year from clean ground to finished, fully operational to build a 240 megawatt data center. Unlike the AI industry, which takes multiple years to do it, our systems are fairly simple in that they're very modular. They use 40-foot containers, and we can pick up and move if need be. As a matter of fact, we've done it in the past. We moved the whole data center from Hardin, Montana to Texas in the matter of about 35 days. So it can be done, but you have to have access to power. So were mining to be banned in this country, you would see an exodus, but it would take most probably about 18 months for a lot of that mining capacity to move to other places in the world. But mining is growing all over the world. You're seeing growth in Africa, Ethiopia.
Does it make sense to move? If we could have only 2 years of a really crypto-friendly Congress, and we could see regulatory changes 2 years from now, does it actually make sense to make these big moves?
No, I don't think you're going to see any miners picking up and moving. I think what you are going to see is miners like ourselves who want to have a diversified base of operations. So our goal is to have 50% of our operations international and 50% domestic in the U.S. Today, we're more like 80-20 in the U.S. And that's really more a focus not on regime or regulatory risk, but it's on power and energy access and costs in the U.S. We compete with the AI industry very much for power, and access to grid-connected power is becoming harder because of that. And so miners like ourselves are very focused on owning, generating assets, and generating our own energy. We recently announced one of our first projects to build micro data centers using flare gas from oil fields, where we mitigate methane by burning it, generating electricity from it, and generating our own electricity.
Right.
So yes.
Yeah, so one question I have here too is, when we've talked before, this year was a very big year for Bitcoin alone, given another halvening cycle. And we've talked about how miners have been diversifying more, but you've just seen this shoot higher in prices of Bitcoin. Does it make you change your thinking here about the value of Bitcoin moving forward? Do you worry about the toppiness of the levels we're at? Or do you think that this new administration has just unlocked a new wave of price increases that could really change the equation for you and your rivals?
I think a number of things unlock value in driving the price of Bitcoin. The ETFs at the beginning of this year had a huge impact. They accelerated price from the December price ranges up through June. You saw a fairly strong pickup because of that. What we're now seeing is the market understanding there will be a regulatory friendly environment in the US. Bitcoin has not been front and center to the SEC's eyes. It has been other crypto aspects. Bitcoin is a commodity, so the SEC has essentially ignored it. What Bitcoin has suffered from in the US is challenges in the banking world with access to on and off ramps, which we believe now will be alleviated with the new administration. The bigger issue has been the threat of the Biden administration's desire to put a tax on the energy used solely by Bitcoin miners and not other industries. And I think Bitcoin mining, collaborating with the AI industry in doing projects. Bitcoin mining is very synergistic to AI in that our load profile matched to their profile is very synergistic. The other thing is, I think this administration is going to be very positively inclined to looking at U.S. miners and the protection of block space.
Okay.
Bitcoin is very dependent on miners who process transactions. If mining moves offshore, then other countries have control over the ability of U.S. Bitcoin holders and investors to transact, which is why the U.S. needs to have about 40% of the global hash rate in the U.S. so that they can control enough block space so that U.S. investors and international investors who want to invest in the world's largest equity market, which is the U.S., can feel safe and comfortable.
Fred,
the other thing is you look...
I'm sorry to cut
ahead.
you off. We're running up against the clock. Do appreciate you joining us this afternoon. Always good to catch up with you. We'll have you back soon. Fred Thiel, CEO over at Mara. Thanks so much. Keep an eye out for the company's earnings. Those cross after the bell today. Coming up, we're going to take a look at Dogecoin's surge. It makes Bitcoin volatility look like child's play. Meanwhile, a Trump win could make a Bitcoin reserve entirely possible in the U.S.
There are actually quite a few pro-Bitcoin senators and congressmen that are winning their seats and very vocal about pro-Bitcoin and about establishing Bitcoin reserve at the federal level.
Dogecoin is outperforming Bitcoin these days. Look how stable Dogecoin makes Bitcoin look on this 3-month chart. Yeah, you barely see the volatility at all in Bitcoin when you compare it. We're going to talk to Bloomberg's Mike Regan now about what exactly is going on here, because I think before this moment, a lot of people complained about the fundamental case for Bitcoin, and you could complain even more when you're thinking about Dogecoin as a traditional investor. Also, a lot of people asking if institutional investors are buying this. Institutional investors who got into Bitcoin to begin with were comfortable with this world, were they not?
Yeah, but more or less. I mean, Dogecoin, I think, has surprised everybody with its staying power. And, when you talk about, the fundamental values, that gets kind of, sort of a philosophical discussion when it comes to crypto. But one thing about Dogecoin that's really interesting is it is actually very cheap to transact with, much cheaper than Bitcoin. So, we've had stories you do actually find people like for remittances, people sending money back home to Venezuela to their parents. It's a lot cheaper to do that with Dogecoin than most other cryptocurrencies. And there's even people developing payments apps. There's a pizza place, Williamsburg Pizza in New York, that accepts Dogecoin. So it started as a joke. It still makes me laugh to think about it, but there is something there that's a little bit sort of more serious than most people realize, I think.
But how tied is this to Elon Musk? I mean, Department of Government Efficiency, DOGE.
Yeah. This rally we've seen, I think, is almost completely tied to Elon Musk. I mean, you start with the notion of sort of market beta. And the same is true in the stock market. When the S&P moves a certain percent, there are certain stocks that move a lot more than that. So Doge is starting from that layer, as are a lot of smaller meme coins. If Bitcoin's up, they're gonna be up a lot more. If it's down, they're gonna be down a lot more. But you cannot, sort of ignore the Musk connection here. Elon Musk has been a huge champion of Dogecoin, mainly, I think, just for the memes. The guy likes funny memes on the internet. Dogecoin is sort of the meme coin of choice on X and Twitter before that. So it's hard to know exactly if that's as far as Musk's appreciation for it goes. But regardless, crypto is all about speculation. He likes it. He's got the ear of the president. It's up almost 200% since the election.
The payment story is really fascinating.
Yeah, it really is. Payments and Elon Musk. Bloomberg's Mike Regan. Always good to check in with you. Thanks so much, Mike. That is going to do it for Bloomberg Crypto. Join us next week. This is Bloomberg.